Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Likefolio, taking a look at the Game of Thrones around Netflix today. All right, so let's get into it, Landon. So it's been like a bunch of gamesmanship around this recently. So interest in the story is high. Tom calls it a soap opera. When you look across your data, what does it look like for Netflix now?
Yeah, I mean, for the last, 6 months or so, the data has looked pretty poor for Netflix. We've been bearish on their last two earnings reports, and because of the data, obviously, and the subscriber numbers have just been continuing to not impress. In fact, they stopped reporting subscriber growth in favor of monetization, which is always a bad sign. But yeah, I think this is one of those interesting sort of business cycle cases where you've got the early leader of, cutting the cord, I think is what we called it back in the day, and moving everyone over to streaming. And Netflix was by far the early leader, the dominant player. There's tons and tons of competition now where, now I think people are probably paying more than they used to, with their all-in-one cable bill. So it's kind of an interesting flip that's happened. And Netflix is a bit of a victim of that competition because they've got to keep up. Content's expensive. And now they're playing the ad game. They're trying to get more people on ads instead. And you can see from our data here that this is just not great. I mean, I think that actually a lot of if you take out Hulu, because a lot of that decline is sort of in the shift to Disney Plus. So that one's kind of iffy as far as a data perspective. But if you take that one out, Netflix is at the bottom, and it's the only negative one. And so that's obviously not good. Everybody else is kind of doing well, growing. And again, this is year over year. So they've done very well. And so for them to maintain that growth, it's going to be difficult. And some of these others are, they've started at a lower spot, so that's easier to grow from. But still, if you're an investor in Netflix, you don't really care. You want more growth. You want continued growth. So it's a big concern. They stopped reporting that, and the data continues to show a decline in interest in Netflix. And the stock has kind of gone with that. I mean, if you look at July, I think we're mid 130s, and now we're low 90s on the stock. It's just continuing to go down, and so that's trouble. Now, last quarter they did have that one-off sort of Brazilian tax issue that dropped margins by about 1%. They did also talk about how their ads are strong, and that's good. They're doubling their ad revenue, on track to double on a year-over-year basis. So, they've got some positive things going. And then, of course, everybody's talking about this potential acquisition, competing with Paramount and, wanting to buy Warner Brothers. We'll see what happens there. I think we're not going to know for quite some time. But, it's just an aggregation and pulling everything together when it comes to content. And that's what Netflix is competing on, is content. And it's not competing on the platform. It's not competing on that kind of thing. It's just content, because everyone's kind of got about the same level of platform. Software is not hard to build there. So they've got the users, but users have options, and it's very, very easy to cancel, to subscribe to someone else. And it's not like if you have to have one or the other. You're just picking the shows that you like and going with that. And so they're constantly trying to keep the customer, trying to show new things. I mean, Stranger Things is doing well now, but it's the last season. And, so they've got to continually reinvent the wheel and bring people in, or, acquire a company that has products for them to continue to get people to come in. So it's a tough business. Right now, the data that we've got is fairly bearish. If you're neutral on the stock, the stock's down quite a bit. So, it's starting to balance out, but I'd still kind of stay away from Netflix right now. Just, I want to see that number on the subscriber growth continue to go up instead of down. And our data is showing that's not happening just yet.
Landon, we know why they stopped reporting of subscriber growth, because they're starting to get saturated, especially here domestically in the U.S. and North America. They keep on talking about international expansion supposed to help them. But when you look at your data, and you mentioned Stranger Things, but the way that I look at it is they got a real big bump at the end of last year. They had the Christmas Day NFL games. They had the fight. Sports, they're trying to roll out more sports. They just can't do it at this point. Is that part of the reason why maybe this stock has faltered. It's down 30% from those all-time highs that we saw in the summer due to the fact that, they've got a couple hits, but they need more hits, and that keeps people subscribed and people re-upping their subscriptions.
Yeah, and I think when it comes to, I think you hit the nail on the head. When it comes to keeping people engaged, you've got to have new stuff coming out all the time, which is very difficult. If you got a hit show, then you just release a new season, great. But eventually that show is going to wear off or run out, and then you got to have a new hit. I think sports is the easiest solution to that problem because, every day there's a new sporting event or every week there's a new sporting event. As you just plug it and play. Like you let the players play, you don't need to worry about scripting it. But yeah, it's tough. And you can see here the difference between the stock price, that dotted line, the white line, and the consumer interest, consumer demand, web visits, all of that. It's not good. I mean, you can see why we've been bearish for the last couple of quarters. It's sort of flattening out. And it's getting a little bit of move up, right now towards the end of the year as they've got some programs coming out. But again, this is not I need to invest in that kind of chart, right? I mean, this is kind of like, okay, I see why they're selling off kind of chart. And so, maybe if they get to mid 80s or 80 or so, and we start to see an uptick in that blue line, then we can change our tune. But right now, I don't see any evidence that's compelling for me to jump into Netflix right now. The competition is just so tough. It's a tough business. And again, they've got a lot of, goodwill. They did a great job. They're the first ones in, but, nowadays people look at their credit card statements and they're starting to look at things they can cut. And, if you're subscribing to 5 or 6 different platforms, maybe you can cut one of them. And I used to say, it used to be the case that Netflix was the last one to go, but maybe that's not the case anymore. I mean, YouTube TV provides a lot of things. Hulu provides, Disney Plus provides a lot of things. And so there's a lot of competition out there. And, back to that subscriber growth, we talked about Meta, Facebook the other day, and when you've got half the world as a daily active user, a monthly active user, then you focus on monetization. Netflix is focusing on monetization on those reports, not for that reason, but because they're losing subscribers. So it's a tough, they're losing subscriber growth, I should say. So it's a tough business. And right now, I think we're kind of hands off, waiting to see. If I had to pick a direction, I'd probably pick bearish. But I want to see, some turnaround in demand and maybe a little bit lower price.
Landon, I want to dig a little bit deeper into that sports point that Tom was making. You think about the fight this weekend with Jake Paul and Anthony Joshua. How much, it's obvious that Netflix is leaning into sports. They also hired their first anchor, poach L. Duncan, away from ESPN. And you remember once upon a time, everybody would go buy the fight, or you found somebody who went to buy the fight, right? Is this part of what Netflix is leaning into, like, trying to reclaim, say, like the Tyson years?
Yeah, I mean, absolutely. That is, I think sports are the easiest solution. There's a reason that for a very long time on Folio data, ESPN was the top streamer. I mean, it was unbelievable. It was just constantly, there's always something interesting going on if you're into sports. No matter what your sport is, there's always a story, right? I mean, that's their job, is to come on and figure out what the story is, sell that story, and then make the sport or the show more interesting. And so it's a never-ending, unpredictable saga of different things happening. So sports, I think, are the solution to content fatigue for these companies. But, it's a tough nut to crack. You got to get in there and you got to get the contract. And of course they know that, so it's expensive. I think that, for a very long time, it was just, let's just make better shows and better shows. And I tell you, just looking at what AI can do, we're not there yet, but I think within 5 years, we're going to have TV shows and movies produced by people you've never heard of that are very competitive to shows that Netflix spends, hundreds of millions of dollars on. And that could really put a damper into things for Netflix and all the streamers. So I think sports are really the only cheat code that's proof against AI. You're not going to have anyone building that. So it's concerning long term. The content race is nonstop. I think sports are the answer, but they got to secure all those rights. They got to figure that out, and they got to be the one that delivers it. Otherwise, they're continuing to compete against a very bloody market where people only have so much money to go around. If you go back in the day, just remember what it used to be like to spend $80 for a cable bill and have everything. We used to complain about that because Netflix was only $10. Well, now everybody's spending more than $80 to have everything, and they're just using a different provider. providers. So it's kind of an interesting situation, and I think some of those providers are going to start getting cut from people's credit card bills.
I think you make a great point about sports not being replaced by AI, because the one thing is, like, my son, for instance, wants to be an athlete when he grows up, which I still obviously make sure he's on top of his books. But I don't have a problem with him wanting to be an athlete, because I'm like, well, at least that job has some security nowadays. All right, Landon, we'll leave our conversation there for today. That's Landon Swan, co-founder of Likefolio.